Hello traders and welcome to another video review. Today is Tuesday, January 6, 2026. Let's take a look what do we have in the economic calendar for today. So as you can see, we got data from the UK, retail sales monitor down from 1.2 to 0.7, but beats the expectations. French CPI up from minus 0.2 to 0.1%. Plenty of the other services and composite PMI data was released during the early London session trading. We got plenty of data from the Eurozone countries and from the Eurozone itself. Mixed bag of data. Overall, Eurozone composite and services PMI are down and are lower than the previous reading and lower than the forecasts. We are still waiting for the global composite PMI and services PMI data from the UK, and this data are scheduled for release at 10:30. At 2 o'clock we got German CPI data scheduled for release. Then we have the composite PMI and services PMI data scheduled for release from the US. This data is scheduled for release at 3:45. At 4 o'clock we got global daily trade price index from New Zealand, together with the German Buba Mauderer that will give a speech. 10:30, the last event of the day, API crude oil stock data release. So PMI morning in the forex markets. Let's take a look. What do we have here on the charts? Euro dollar bounced from the lows of 1.1660 when we hit the technical support here. So we might remove this supports here, as the market doesn't actually respects them. We hit the extremely oversold conditions on a 4-hour time frame chart. That's another important thing here, and the bounce was quite strong. Straight on towards the level of 50. So the neutral level was hit. That means we tested the 100 periods moving average 1.1745, and now the bearish engulfing pattern is being created on the 4-hour time frame chart after the pullback. So right now what we do is we apply this trend line here. As you can see, the market keeps trading below this orange trend line. Let me make it thicker. There you go. So as long as we trade below the orange trend line, let me make this one as a black one. There you go. As long as we trade below the orange trend line, the outlook remains bearish. Next target is 1.1655 and 1.1615. Right. The major technical support is still located at 1.1547. So pretty negative reaction on the data from the euro dollar. British pound reacts a little bit better because we are back inside the channel. Moreover, I don't know if this channel is applicable anymore, so let me just move it like here. So is that doesn't actually looks like it is, but we will leave it for now. Okay, this technical resistance 1.3532 has been violated, so the next target is located here, and this is the level of 1.3587. Very nice rebound from the level of 38 on the RSI. We almost hit extremely overbought conditions. So 100 periods moving average provided the dynamic support. We broke above all of these levels, but now we are going to change a little bit our levels. So the lows will be technical support. All right, and that's about it. And this level here doesn't actually look like it's being respected anymore, so we are going to move it a little bit higher for this level here, and we just broke above this level, so let's leave it like that. There is a chance that we will continue higher, but please notice we might hit extremely overbought market conditions. US dollar versus the Japanese yen. Now this situation doesn't actually look either good or bad, bullish or bearish. We are back inside of the smaller range. We are back towards the 100 periods moving average, which is located at 156.13. Nothing is going on here. We just moved lower with the RSI to the level of 42 after this movement back to the range has been has been made. So right now the situation remains range bounded, and there is not much clues about the further movement either to the upside or to the downside, as neither bulls nor bears are in charge right now of this market. We are waiting for the trigger on the US dollar versus the Japanese yen market that would start some sort of the trend either to the upside or to the downside. Right now nothing like this is happening. Gold market, yet again the gold market is moving higher. 4,454 is now the current level. We are very close to the 4,549, the technical resistance level, and if we apply the local technical support at 4,237, you can see that this movement to the upside was quite substantial. Let me apply the Fibonacci. We didn't actually play with the Fibonacci for quite some time. So from the highs, extreme high, to the extreme low, let's see how much did we well, we trace already 61%. So for me the 78 is too close to the swing high, so we will not be paying attention to this one. What we can apply on this chart is of course the technical support located at 4,403. So this is the technical support, local technical support. This market is starting to look nervous here around 4,455. S&P 500 tried to rally yesterday. Nevertheless, it hit only the level of 6,917. So it's way below the swing high. Right now we are trying to move a little bit higher, but with this kind of the momentum, 52 pointing to the downside, and this kind of the candle, it doesn't actually look like the bulls want to continue higher. For now it looks more like the bulls are a little bit exhausted, and the market would come back to the equilibrium state somewhere around the 100 periods moving average, 6,859. Only a sustained breakout below the January 2nd low at 6,818 would be considered bearish, and it will be of course a short-term bearish situation. Crude oil close to the level of 59. Just recently we've seen the crude oil testing the 58.87 level. Nevertheless, it was rejected during the December, the end of the December. So right now this is the current situation, and there is one more level which might be interesting. There you go. This is that level here. So very strong supply zone. I will add one more level here for the convenience. There you go. This is one more. There you go. Level of the supply. So quite strong supply zone located up towards this 59.03, and the market is trying to move above this level. If they break above the supply zone, the next level is 16.49. Nevertheless, please notice that we've been rejected so many times on the supply zone that the chances for the breakout are significantly lower. And finally we got the Bitcoin, and the Bitcoin after the breakout above the 90,000, 91,000 supply zone hits the highs of the beginning of the December, roughly just below $95,000. So this is the current situation. Let me just show you this on a daily, maybe that will be better. There you go. So that's the daily time frame chart, and you can see right now why this is important. Right, this is very important level right now for the bulls. They need to break above this level to test 100 periods moving average on the daily time frame chart, which is just below $100,000 right now, 99,592. So the current situation is very bullish on the Bitcoin, despite the fact that we almost hit the extremely overbought conditions. Looking bullish, it might go even higher. Technical resistance, as you can see, is the next is located 98,940, a little bit below the 100 periods moving average, and with that kind of momentum there is high chance that we will have a breakout. But first the breakout needs to be done on the Bitcoin, and then the the bulls will gain more territory to the upside, and finally the pullback might develop higher, possibly even above $100,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.